Ready?
Mimi, you
Yeah,
should.
I'll go ahead. I'll go ahead
Yep.
because I do want to have a chance to introduce both who SHED is to the people on the call
Yeah.
and also to introduce Nicole as well. I'm Mimi Taylor Hendricks, and I am the president of the board of SHED. And SHED is an acronym that stands for Sustainable Housing and Equitable Development. We've been in existence since 2009, focusing on assisting seniors, disabled, and veterans in University City with minor outdoor repairs, priority given to those seniors who may have been cited by the city, priority to those needing to be kept safe, warm, and dry, and addressing needs versus wants. This home ownership education series has been an idea that SHED has thought about since the new board came together in 2019, but because of COVID, a lot of things were just put on hold. So why the focus on education? Basically 3 points for us. One is we know that home ownership is one of the largest assets many people own, and it has a history of appreciating over time. It's one of the most common ways for parents to pass on generational wealth to their children, along with life insurance. And for us at SHED, focusing the majority of our work on the third ward, we are working on creating some sort of parity between among the wards. We know that home ownership stabilizes a neighborhood. We know that since the housing downturn in 2008, the third ward has seen rentals double, an alarmingly larger rate than the other two wards. And as a neighborhood on the edge, we feel that the third ward can either improve or deteriorate based on the attention or neglect that it receives. So with the help and knowledge of several of our board members, local University City realtor, Cindy Theory, and several banking experts, SHED has created a series of presentations focused on the preparation and process of purchasing a home, the various channels of assistance that exist to help with costs, and the issues of maintenance that will need to be considered when buying a home. So to kick off this second session in the series, our guest presenter is Nicole Theberge, which she's with First Bank. Nicole has 20 years of experience as a mortgage lender and has worked with nonprofits like SHED and conducts financial literacy classes. So Nicole, help us understand the home buying process.
Okay, and it looks like we have one more to admit, Lakeisha. Hi, I'm Nicole with First Bank. I do a lot of financial literacy, so please let me know if you have any questions that are not answered on these slides. We only have about 20 or 30 minutes to do this, and then we also have a realtor with us today, so she will help with that side of things. You know, a lot of the questions I get are, you know, what do I need for application, when to start an application, and how long does the process take? So these are the things that I'll talk more about today. Collecting the documents for pre-approval. I understand that SHED's going to send you guys out these slides, so I won't go through everything, but it's basically tax returns, pay stubs, and your bank statements. So it's just very simple. They're going to look at everything on your tax returns. If you file self-employment and you write it all off at the end of the day, it's what you claimed to the federal government. That is your income. So that doesn't include like writing off dependents and things like that. But if you ever have questions about tax returns, you can always call me. I can always help with tax returns. One of the simple things are simple rules to follow. You want to make sure you don't change your job in the middle of buying a house. If you think you're going to change your job, talk to your mortgage professional before you change your job to decide whether or not you can do it now or you need to wait until after you close on your house. Don't open any new credit accounts within probably 6 months of going to buy your house. You want to go buy a car and then within that 6 months want to buy a house. It's going to change what you're going to afford, and it may not show on your credit when the bank pulls your credit, and then you end up with a problem at closing when it finally does show up. So just be very cautious about opening any new credit and within 6 months of purchasing. Don't buy or lease a new vehicle. You know, put your money away. That's going to be your down payment. Don't put it in the account that you use every day. Because then if it's in another account, then you don't have to worry about it, worry about spending it. keep organized with all your documents and tax returns. Don't co-sign for anyone. Be prepared to explain large deposits. If you put in cash in your bank account, we need to be able to show where it came from. So just a few do's and don'ts. Making your loan application. So this is something that we're here to help you with. We're gonna help you identify credit issues. If there's anything that's going to keep you from that loan approval, guide you through the loan application and the closing process, help you to determine home purchase price that you can afford. In this, I try to talk to you about what you're comfortable with, not just what you get approved for. Help you compare different loan programs so you can choose the best one for your financial needs. I know the realtors on here, Cindy, is going to help you with some of that later in this. Manage and address any issues that come up along the way. So don't be afraid to ask questions. I always tell my clients that if you're worried about something, call me and ask me, because I'm going to help you not be worried about it. If you can,
Please place the item.
Kristen, if you can mute, that would be great.
And Nicole, one quick thing I forgot to
Yes.
mention to folks, as we're going through on the bottom of your screen, your Zoom screen, you do have a button for chat. If you think of a question along the way, or you want more detail on something, just go ahead and put it in the chat. We'll be checking that as we get towards through the meeting.
Perfect. I do run rather fast, but interrupt me anytime. But definitely don't be afraid to ask questions. If you're a realtor, if you're a mortgage professional, that's what we're here for. We're here to walk you through the process. This is something we do every day, so it doesn't worry us. But if there's anything that does specifically worry you, then you should ask us anything you think of. Not ask your family that doesn't do it every day. When should you start the pre-approval process? So this can be different for everyone. If you think your approval is going to be solid, you have good credit, lots of assets, you may want to reach out to a mortgage professional and ask them a few questions, but you may not start the pre-approval process until you're really wanting to move. Sometimes clients will find a house the first day they go looking. It's not very typical. Sometimes it could take, I have a client that's been looking for a couple of years. That's an oddity, but she ended up with some banks that weren't, didn't get her process going quick enough. But you can close in a house in as little as a week or as long as, several months. It's all about finding that correct house. But the pre-approval process, if you're a little worried about anything, you should start it right away. That way, if you need to put it on hold and work on something and then finish it up later. So there's a difference between a pre-approval and pre-qualified, as Cindy could probably attest to, realtor on this call. She's going to tell you pre-approval is the only way to go right now. If you get a letter, but you didn't give the bank your taxes, pay stubs, bank statements, things like that, then you're only pre-qualified. That means that an underwriter hasn't seen your file, they pulled credit and they listened to what you had to say, and you're pre-qualified based on those items. Pre-approval means your whole file has been approved based on your information, all of your taxes and pay stubs and all of that kind of stuff. And you're only waiting for a contract, and then you'll need a few things once you're actually in contract. But there is a big difference between pre-approval and pre-qualified. Pre-qualified doesn't mean you're going to close. It just means that the bank pre-approves you based on the information you gave them. It's a conversation, and it could take 5 minutes to get that. How do you determine how much you can afford? So for the bank, I'm going to say an easy thing to start with is take half of your monthly income and then take all of your debts out of it, and you see what you have left. Now, I will say most banks aren't going to go to 50%, but I would at least start with that. Some people don't know where to start. So if you take all of your monthly income, your gross income, not what you bring home, but your monthly income, take half of it, and then take all of your monthly bills out of that would show on your credit report, a credit card, a car payment, things like that, and then see what you have left. If there's still a lot left, then think about really what you feel comfortable with paying, whether it's your rent, things like that. Most of the time, I tell people to do a budget. How much do you pay in rent? Are you comfortable with going higher? Maybe you need to write everything down. Just make sure you're comfortable with that payment, because it does not go away. It's not paid off in 5 years like a car. It's not year to year like rent. You really have to be comfortable with that 30-year mortgage. What does your credit score need to be? This can be different at different banks. First Bank's minimum credit score is a 620. You can go down to a 585 or something like that, but the closing costs are going to be higher. It's going to be a non-conforming loan typically. So just be careful. In every bank, whoever you bank with, you ask them that question. What does my credit score need to be for the different products? Some of the down payment assistance programs have a minimum credit score. So we need to figure all that stuff out up front. Do you have to have a down payment? If so, how much is needed? So typically you'll want 3%, whether it's conventional or FHA, but you don't have to have a down payment. You have down payment assistance programs for first-time home buyers. Most of them, there's income limits on those. There's a lot of different programs out there. There's first-time home buyer programs in just about every town. Every city has a different one. There's things that are for the whole state of Missouri. There's things with multiple states in them. So it's up to your mortgage professional, and sometimes your real estate agent knows about some of them. So definitely ask around to the professionals to see what programs you can find, but save as much as you can. It's really hard to buy a house with no money. I normally tell people they need at least $1,000 in the bank. It's almost impossible to buy without it, just because as soon as you write a contract, you have inspections, you have money to put down on the contract, things like that. So save as much as you can. So one of my questions is escrow, and this is a question you probably won't have until you start doing your loan, or sometimes even at closing. The biggest thing I mention it, the reason I mention it is because it's the one thing that can change your mortgage payment. You think your loan is fixed for 30 years. This is what your payment's going to be for the next 30 years. Well, the mortgage part of it, the actual principal and interest of the loan, is set. But the escrow, which is taxes and insurance, can change. Your insurance is something you shop for. You shop for where you have your car insurance. You can add your homeowners to that. You may shop around for other places, but it's just regular insurance for the house. Your taxes come with the property. So you need to know how much the taxes are on that particular property before you write a contract. I would hope that you talk to your lender about, well, what's my payment going to be on this one with this much taxes? And the only number you won't know is how much your insurance is. So you can guess a payment a lot better with the price and how much the taxes are than you can randomly just on a price range of 200,000, because I have a client that wrote on a house for 210. The taxes were only $300 and her payment was $1,300. She wrote on a different house for $150 and the payment was $1,300. So the price of the house has only part of it of payment. There's still those taxes and insurance that can make a huge difference. But you'll get an escrow statement every month, or I'm sorry, you'll get an escrow statement once a year to tell you whether or not your escrow is going to go up or down, which can change your payment. How long does the mortgage process take? So part of the mortgage process is just the pre-approval. So I would say you can get a quick pre-qualify sometimes within 5 or 10 minutes. For the full pre-approval, you have to get underwriting. So that could take a week or two, depending on how busy that mortgage company is. And then, but for me, the whole mortgage process is closing. I have closed loans in 7 days. It's doable, but I would say a first-time home buyer should take their time and do their inspections and things like that. So typically they're around 30 days. That's a typical mortgage time right now. It gives you time to write your contract, do your inspections, and then order your appraisal. So you're not spending money on an appraisal while you're doing inspections, things like that. It just gives you a little more time for the process. Appraisers can take a week or two. They don't want every single deal to be closing in 7 days. They can't handle it. So there's other people involved. We have a title company involved and they have to run title. They have to do their figures. They have to make sure there's no liens on the property from the seller or the buyer. So there's a lot of people involved. It's not just the bank. So the whole process takes about a month. There is lots of things going on behind the scenes. If the bank isn't asking you for documentation, that's great, but they are still working on something. So just keep that in mind as you go through the process. And this is for Cindy.
All righty, let me get off mute there. So you went through that very quickly. Thanks, Nicole. So let's just stop and see if there are any questions. Mimi, do we have any questions in the chat, or does anybody want to chime in? No?
Nothing in the chat, but I just had a quick question.
Sure.
Nicole, you talked about several expenses. I mean, I'm familiar with escrow and what that involved.
Yes.
But so does the home buyer need to come up, who pays for the title when you go to title, because they've done this research to make sure it's a clean title and nobody else is trying to claim ownership? Who pays for inspection? Who pays for appraisal? And how is inspection and appraisal different? So is that all money that I need to have in addition to what? What do I need to have?
So I normally tell people, I mean, if we're talking bare minimum dollars, I don't know how much inspections are. Cindy can probably answer that question better. It's based on the price of the house, and depending on the price of the house, you may have $500 earnest money and $1,000 earnest money. And I'll explain what earnest money is, just like your security deposit on the contract. It gets held at the title company. But depending on the house, you're going to put that down and it's going to be held at the title company. They're going to cash your check and then you don't get it back until closing, and it goes towards your closing costs. Now, the inspections, it depends on the inspector, but most of them do want to be paid at the time of inspection. So for me, at a bare minimum, you need the earnest money and the inspection money. So these are things to talk to your realtor about. How much am I going to need for those, depending on the price that I'm writing on. As far as appraisal, a lot of banks will ask you for a credit card up front, something. But if you have paid for it and then you go to closing and you have the seller pay closing costs, the seller may be paying for it. You know, it's all about, and title, all of that stuff. So it's about negotiating that contract, or how many down payment assistance programs you're using. You can sometimes stack multiple down payment assistance programs. So you may have one paying your down payment and one paying your closing costs. So there's a lot to talk about. And it gets to be very specific for each loan. So it's hard in a general situation like this to talk about all those things, but you're right. I mean, you pay for a whole year of homeowners insurance at closing. And if you don't have a seller, a down payment assistance program paying for that, or any of your closing costs, you could have anywhere from $5,000 to probably $7,000 at closing. You know, closing costs used to only be about $4,000, but I guess insurance and everything else has gone up in price. So it seems like they're between 5 and 7, depending on the program and the price range. But yeah, there's a lot to it. And that's definitely being comfortable with the people that you work with. So you can ask all those questions and they'll explain it all. And which program are you going to have that money, and how much will you need? That's why getting a pre-approval up front might be best, unless you just know you just have tons of money in the bank. I mean, you want to be pre-approved maybe even a year before you want to buy, just so you know what you're going to need.
Or if there are issues that you need to work on repairing.
Right. Exactly.
Yeah. And so we are talking in very general terms because every deal is very unique. So, you know, just to give you an idea, I had a client who had a VA loan, and she was able to take advantage of a first-time homebuyer program. Well, VA loans, you can buy with 0 down. And because she had $6,000 worth of home buyer assistance, she actually got a check back. Now, she had put down, I think, $2,000 on her her earnest money that she had put down. So she did pay that $2,000. But this was a $200,000 house, and she walked away from her closing with a check, which is sort of unusual. You usually don't take money home when you're buying a house. But that said, let's get into more of the process. So Nicole talked a lot about getting that pre-approval and what you need to do up front. And that truly is the first step, in addition to, saving money for those costs. And I'll go a little bit deeper into that if you guys want to hear about that. But harkening back to what Mimi said, home ownership this is kind of like, why do I want to buy a house? And because it's the largest source of wealth creation in the US. And so this is a stat that just came out from the National Association of Realtors. And you can see that, for the average American, it increases their net worth 40 times more than that of your average renter. And if we go to the next page, there's another stat that talks to, I'll just wait there. Oh, nope, go back one. Oh, there we go. So this goes to the point of you're going to pay rent or you're going to pay a mortgage. When you're paying rent, you're increasing somebody else's wealth. When you're paying a mortgage, it's almost like a forced savings account, and you're going to gain equity and at the same time, that investment's going to be appreciating if you keep it up, right? So, this is a way to build wealth. And while you might start out in a $200,000 house, the average home buyer moves every 5 to 7 years. And that's because they might want a larger house. Maybe they're single or a young married couple, and they, buy this house, and then they start having children and they need a bigger house. Well, they take that equity that they've earned in their first house, and then they can afford to buy something larger. So on this one, this is just a slide that I saw online, and I thought I would steal, but it in today's market, sometimes, depending upon your rent, it can actually be cheaper to buy a house. Now that's, you're going to need some those upfront costs that we were just talking about. But this slide speaks to what percentage of income you need to rent and what percentage you need to buy. And as you can see, it's becoming more affordable to buy. So what is the actual process? And we'll start on the next slide. Oh, I forgot about this one. This is an example of what it would cost to rent versus buy. So this is using an example of a $300,000 house. Rent payments might be $2,500 a month. If you multiply that out over 30 years, there's $900,000 in lost equity versus this is putting $15,000 down. You borrow, the rest, and your monthly payments $2,500 a month, right? And so instead of paying the landlord that $900,000, that is money that you're going to see back. You're going to and realize that $285,000 there. So this is just an example. I guess that's something I should keep stressing. Every deal is different. Every client is different. No two deals are the same. So we're going to stay on this slide for a bit and talk about the timeline. Oh, yep, this one right here. So some people, I've had people call me and say, I found a house, I want to write a contract, boom, bam, and we go through the rest of the process. But that's not normally how it works, especially for a first-time home buyer. So, to reiterate, it's that, have a small savings to get started, get your pre-approval, then you can look for a realtor. And that's, where I come in. But I will also say, there are many different kinds of realtors. So you should, interview 2 or 3 and find one that you feel meshes well with your personality, because you're going to be spending a lot of time with your realtor. And I know a lot of my clients, I actually become friends with. I have one first-time home buyer. We're down to like having breakfast together after we go look at houses, because it's become such a slog in this market. But interview those realtors, and I put some questions in the back for you to, what hours do they work? How do they communicate? What experience do they have? Some realtors like to work with buyers, some like to work with sellers, and just get comfortable with the person, because they're going to be representing you, and you want to be confident that they're going to be able to negotiate in your best interest. So then you start on the home hunt. And so there are some things that you need to consider, like, I want 2 bedrooms, I want 2 bathrooms, but, where do you want the house to be? What is your budget? That's a conversation you can have with the lender and your realtor, but you really need to think about what your lifestyle is. Do you want to be out in the country? Do you want, an urban house? Do you want walkability? There are lots of things to consider. And it even comes down to the upkeep, right? Some people want a big yard and some people want a small yard. So you really need to nail those things down and determine, what you want in a house, how much upkeep you want. And I can tell you, I have half an acre for a yard, and I'm getting ready to downsize because I'm getting tired of taking care of it. But once you have that conversation with your realtor, they can do something called an auto search. And that is using what we call the MLS. It's the multiple listing system. Every realtor has access to it. We pay to belong to that. But that's where any realtor that has listed a property for sale, it's going to be in there. And we put your criteria, your search criteria into that. And then you will receive an email anytime a property that matches your criteria comes up. And you can get very granular with that. It can be, I want a 3-car garage or a finished basement, or I want to be in this, specific neighborhood. So if you're buying in St. Louis City, I want to be on the hill. You can get very granular with that. At the same time, some clients choose to look at the online resources. So your Zillows and your realtor.coms, but I will tell you that they are pulling the majority of their information. They pull their information from public sources. A lot of that is coming from the MLS, but then they also have properties that are for sale by owner. And those are, a realtor can help you with those as well, but those for sale by owners are not going to be in the multiple listing system. But having that search, kind of doing that looking for you is a nice advantage to have. And then, you work with your realtor and say, I want to see these houses. She can tell, when there are open houses, you guys can set up time to go look at houses. And that's where the real work comes in. And so how long does that take, right? It could take a month, it could take a year. I think Nicole said she had someone that had been looking for 2 years. Those are kind of outliers, but it also depends on the market, because the market that we're in right now is really challenging. So one weekend I wrote 4 offers, and 4 of my buyers did not walk away with houses, because houses are going, 40 grand over, 80 grand over, 100 grand over. And so it is a bit of a challenging market. And so it can take longer. So once you find your home and you write your offer, and there is an art to writing the offer, and that's a conversation for another time. I used to say that getting the accepted contract was the easy part, but in this market, it's not so easy. But once you get the accepted contract, you're only at the beginning of your journey, because part of that contract, you will determine, am I going to have an appraisal? Am I going to do inspections? And those are A, where, there are some cost involved, but B, it will help make your decision about whether you want to actually buy that house or not. So for first-time home buyers, as an agent, I almost always tell my buyers that you want to get a building inspection. And then the appraisal is something, I don't want to get into the weeds here, but that can also be discussed. But in this market where everybody is offering over the asking price. So I just sold a house. It was listed at 420. We accepted an offer for 485. Well, guess what? The appraisal came back and it's only appraised at 465, but they waived the appraisal. So by the contract, they're still on the hook to buy that house, and they have to come up with that extra money. So those are reasons why you wouldn't want to waive an appraisal, right? So let's talk about inspections a little bit. So that question came up. So the building inspection is a basic inspection. Like Nicole said, it's based on the size of your house. There is one little trick you can do with an inspection where there's something called a walk and talk. So you're like, I really want this house. You can do an inspection for your information purposes only, and you still have the right to terminate the contract. And so that is done for $200, and the inspector will come in. They basically give you the full inspection. They just don't write a report. And if it's, just some minor things and you're comfortable with it, you can proceed with the contract. But if the inspector comes in and says, oh, you have a foundation issue here, or, the roof is old, or this is old, then you can say, we've chosen to terminate the contract, and then you can still walk away. But and most times buyers are going to do a complete inspection. And so now the inspector is going to write that report, and he's going to basically say, these things are safety issues, another bucket of maintenance issues, and then, things that are good. And then you can go back to the seller and say, the roof is at the end of its life. We would either like you to replace it or have a credit, but you can make these asks of the seller. And so that is another way to either get a new roof or get a credit. So when it actually does start leaking, you can, have the funds to do that. And then there are other inspections outside of the building inspections that many buyers consider. Those include the termite inspection, the radon inspection, mold inspections. If it's an old house and you suspect there may be mold, you may want to do a mold inspection. Each one of those additional inspections, there is a fee for a sewer lateral inspection, which I also recommend, that's $225. So if your building inspection is $300 or $400, and then you get the sewer lateral, which is very important if it's an older home, and that's another $200. You can see how some of these costs start to add up, but in the end, they can save you money as well. So while you're doing the inspections, and the appraisal actually is scheduled by your lender, and that's when you're simultaneously going through that loan process, right, and wrapping up the loan process. And I think Nicole was right. I've had instances where lenders have expedited loans, but for the most part, everyone's comfortable with kind of that 4-week period. It gives everyone, the seller and the buyers, time to pack up and move you to that closing date. But while you're waiting for that to close, you should know that in your contract, I'm going to go back to that contract that you wrote at the very beginning, there are dates in there. There's a date for having your inspections done. There's a date for having your loan done. If you choose to have a survey, and that is kind of part of that inspection process as well, But it's advisable to get a survey because you want to make sure that any outbuildings or fences are within their property lines. And if they're not, then, the seller can get either easements for that, but that can all get resolved. But there's dates for all of these things in the contract that you have to be watching for and adhering to until you get to closing. So when everything's approved, everything's been agreed to, the lender has cleared you for closing, then you set a date with your title company, and a couple days before closing, you're going to do a walkthrough of your property, and that walkthrough gives you the ability to go back into the property and make sure that everything is as it appeared. So you want to make sure, like, oh, they didn't switch the light fixtures out or whatever. You just want to make sure that everything is as it appeared when you made your offer. And then the title company and the lender both are going to give you what's called a closing document. And it's going to detail all your credits, so your earnest money, any of your down payment assistance, as well as all your debits. And those are all the fees, right? So if, your appraisal might be on there, your taxes, your escrow, but all the debits and all the credits. And then at the bottom of it, it says, this is how much money you need to bring to closing. And you can bring a cashier's check, or you can have the funds wired. And then you go in and at closing, you go to the title company with your realtor. Typically the closer from the title company is there, as well as your lender. And then the lender will take you through all the documents that you signed for the loan. Sometimes a lot of those can be done online prior to closing. So it actually goes pretty quick. And then as soon as the other side receives the funds for the sale, the selling side receives the fund, we get the we're all funded email, and you get to move into your new house. So that's kind of the timeline. And as an agent, I know we went through that very quickly, but when I meet with my client for the first time, I kind of take them through this process, but actually step through, like I take them through the contract so they understand, what documents they'll be filling out, and what kind of, the art of writing a contract, because there's an art and a science to that, and just helping them understand it. Lastly here, well, there's one more slide, but after this, these are just some of the homebuyer programs. As Nicole said, there are lots of them. And so if you go out to the FHA website, the VA has programs, the city and county has programs, our state has programs, and then there are lots of lender programs as well. So your realtor is a good person to ask, but so is your lender. And so next slide. Oh, that's your slide, Nicole. So so we'll take Q&A now.
I don't see anybody putting questions in the chat. So if any of you, our participants, want to come off mute and ask a question of either Nicole or Cindy, please feel free to do so. Anything you want more information on? Oh, someone says, can Nicole or Cindy explain the importance of the appraisal in the home buying process? Yeah, I think we understand the inspection part. We've heard that. But what's the point of the appraisal?
So the appraisal is for your protection, but it's also for the bank's protection, right? So what they do is, say a house, I'm going to go back to my example, right? We listed it at 420, but the buyer offered 485, and we accepted it because that's good, right? But the bank wants to know that the money they're going to lend to buy that home is actually worth it. So if someone were to, default on their loan, the bank doesn't want to be stuck with a home that's of less value than what they loaned, right? Now, in some instances, buyers who have the cash will waive that appraisal. And so say a house was 200,000 and someone offered 205.
Mhm.
And then the appraiser came back and said, they appraised it at 200,000. You can your agent, your realtor can provide comps to that appraiser and say, hey, I think, let's take another look at this, right? And sometimes they'll make an adjustment, especially when it's a small amount like that. But the other option is the seller can lower the price. So say, hey, the appraisal came back, it's only 200. And so they may lower the price. And then the other option is you can still pay the 205. If they say, nope, we've got somebody else that'll pay
Mhm.
205, then you can still pay that 205. You just have to bring that extra $5,000 to closing in cash. So you're covering that. And some buyers do that because they know I'm going to live in that house long enough that, at some point it's going to be worth 205. And this is my forever home. So those are different scenarios with appraisals.
Okay, I think it was, oh, go ahead, Nicole.
Well, very simple. An appraisal is to determine the value of the home. That's all it really is for. But I do see another question. Do you
Yeah,
want
there's a
me to
couple
go
of now coming in.
Yeah.
One is because I think you mentioned in the process of
New
being
job,
qualified, don't change jobs. So
right?
Kristen said, what if you just got a new job? How long should you wait to do pre-qualification or pre-approved?
So it depends on your lender and it depends on the job. If you're doing the exact same job you were doing before, or even if it's different, but it's an hourly wage, you work 40 hours a week, your lender may be able to pre-approve you with 1 pay stub or 0 pay stubs. I have clients that move in from out of state, they get transferred, technically in a new job, but they were transferred. That doesn't have any weight. If you get a contract, there's no weight. I would say worst case is typically 30 days, as long as there's no job gap. It's just 30 days on the job, you can close. But it's definitely, you would have to ask your particular lender. I always tell people, if you really want to get pre-approved, just get pre-approved. And then we'll find out, you can tell them, this is what you're looking at. Tell them everything you're concerned about, and then see what they say about it and how long you have to wait.
Okay.
And then we've got something from JW.
Yeah, he asked something about, can you speak to second mortgages? Should you find a different lender that will finance the entire amount? So talk about second mortgage. When do we take a second mortgage out on them?
So, okay, so you typically aren't doing a first and second at closing, but here's a problem with that. When you do down payment assistance programs, a lot of them are second mortgages. They're very quiet second mortgages. They don't really do anything. But if you took out a loan, if you bought a house for $100,000, we're going to use an example, bought a house for $100,000, but your down payment is 3%. So that's $3,000. Let's say the down payment assistance paid the 3%. So you really got $100,000 mortgage without having to put any money down. Your house is maxed out. You have loans for 100% of the loan. So you're not going to go get a second mortgage. There's not going to be anything else that you can withdraw from the house. And typically when people talk about second mortgages, it's like doing a home equity line to do fix up or things like that. You have to have a lot of equity in your home before you can go add those home equity lines. Like typically the bank wants you to keep 20% equity. So on a $100,000 house, you can only owe $80,000. And so that means if you want to take $10,000 out, you can only owe $70,000 and then take a $10,000 home equity line or second mortgage. So it really, it depends on what the second mortgage is for, when you're trying to take it out. You typically aren't taking out first and seconds at the same time. And obviously, if you like your bank, you can do first, seconds, thirds, all of that, whatever within that same bank. It makes no difference. It doesn't give them power over anything more. We've all got lots of bank rules, so we're all following guidelines.
Okay.
Okay.
All right, there's another question.
Next, I'll give that one to Cindy.
Yeah, okay, so Cindy, Dina asked, yeah, when looking for a realtor, what red flags should you look at to make sure they're the best realtor, or make sure the realtor has your best interests at heart?
So I thought I'd put the list of questions in here, but I know I covered them last time, so I probably took them out. But when we are going to send these this recording out and post the slides as well, so I'll drop them in so that they're in there. But I think the questions that I would ask an agent is, and it's, you know, that adage about, you know, it's not what you say, it's what you do. And I think, you know, you can quickly determine if someone is working in your best interest or if they're just trying to make a sale, because those are two very different things, right? So one thing I'll tell you is when you start working with a realtor, they're going to ask you to sign it's called a representation agreement. And it's basically a contract between you and the agent, and it protects both of you, right? It says, I'm going to be representing you so that if they're, you know, driving you all over showing houses, and then, you know, you meet an agent at an open house and she goes, oh, I can help you. Well, then, you know, she just spent all her energy, and then, you know, this agent reaped the rewards. So, but here's what I want you to know about those agreements or those contracts is that if someone was not happy with the level of service that I was providing, that contract would be, I mean, it is a legally binding contract, but I would never hold anybody to it. And that, I think, is kind of the primary question to ask is, you know, when you sign that, make sure, you know, that they are comfortable if you're not satisfied with their level of service, you know, if you can amicably part ways. But other than that, it's like, you know, are they listening to you? Are they a good listener? So I think it's important to listen to your client, understand what they need. And then are they bringing you value? Like everything that we just went through, you know, if you say, hey, what first-time homebuyer programs are there? Are they bringing you that information? Are they introducing you to lenders that might be, you know, be able to help you? So every realtor has a toolkit, if you will. So they, you know, work with lenders. They just become very knowledgeable about the market. So when you're looking at houses, you know, are they on their phone or are they walking through that house with you and pointing things out? So when I walk my clients through a house, because most of them is like, let's look at the systems. How old are they? You know, we're not inspectors, but we've looked at enough houses that we can certainly flag things for you. So it really comes down to how comfortable you are and do you feel that they're providing value to you?
Okay. Nicole or Cindy, do you shop around for loans to buy a home? If so, what are the primary factors for making a lender decision? Either one.
Nicole, you want to take that?
Okay, so a lot of things to look at. You want to know what kind of products they have. And if you are a first-time home buyer and want down payment assistance programs, I think before having them pull your credit or really shopping what people think they're shopping rates, I can tell you that most mortgage companies across the board, you're not shopping rates. I would say they're all typically around the same area. The biggest thing you're looking at is, do you get along well with the person? Are you able to ask them questions? You know, it's being comfortable with them. And that's, I think, the same thing for a realtor. I think you really need to put your trust in them. If you don't trust the lender or the realtor you're working with, then don't work with them. That's the biggest thing across the board. But because you are you have these abilities to get first time home buyer grants, or you think you may, the lender may say, well, you don't. I had a first time home buyer that was very adamant that he was a first time home buyer and he should have programs for him, but he made too much money for any of the programs out there. So, I mean, there can be things like that, but be comfortable with them. I would say go to a bank, but a bank that is based in mortgages and not just, I've worked for several different companies. I worked for Pulaski Bank, which became UC or whatever. They were Pulaski. I worked for Stifel Bank, which isn't really a bank. It's more of a financial firm, but I've never worked for a quote unquote mortgage company, because those are brokers. They don't have any money to lend you. So do pay attention to the name of the place that you're going to. Mortgage brokers, they may have the same rates. They typically do not have the same fees, because they have to pay to get the loan. They don't actually have the money to lend. So that's a question for them, or maybe just to avoid, but just see who you're comfortable with. That's my biggest thing. I'm sure the realtor, because you may have had clients shop for loans more than I have, might have an answer for that.
Yeah, but your answer dovetails right into that, right? It's, I've had buyers come with a lender, and we've gone under contract, and the lender then say, we're not able to approve you. And so then, I was able to get them a lender, right? And so it's like a lot of things in life, right? There are good contractors, there are bad contractors, there's good realtors, there's not so good realtors. So it's really finding out who's comfortable. And, if with realtors, and I don't know if lenders have this, but, look at Zillow.com, even though that's kind of our competition to some degree. We all have Zillow agent pages, and you can see our what our clients say, because they'll go out there and they'll put testimonials, and so that's
we don't really
good
have
way.
anything like that. But the next question is something about a website for funding and stuff. Did Mimi
Yeah,
want to
for
read that?
first time home buyers, yeah, that they can utilize to see all these resources, because I guess what I'm getting a sense of is, if I were a first time home buyer, how do I choose a real estate agent? Do I just look at whose name is on people's lawns the most? Do I look for a real estate agent whose office is in University City or close, like
Right.
Clayton? And the same thing for a lender. I would obviously probably first start with whatever financial institution I do my main.
Right. Who do you
If-
bank
But
with?
do I go outside? How many do I need to look at 3? Do I
Mhm.
need to just another one? How can I be comfortable,
Well,
especially
you
in terms of
see-
lending, that I'm getting a chance to see all of the funding opportunities or assistance that's out there.
Well, I think most of us talk to our friends and relatives about who they've used, who they're comfortable with, but you're right. I mean, if I'm looking in U City, I want a realtor that's based in U City or something close to there, or, you really, when you talk to real, it is very difficult. So maybe, open houses help you be able to talk to people without any commitment. I'm not sure, I've been in this business so long that I know so many realtors. I've never done that from the outside, and as far as the banks, it still goes down to your gut feeling, talking to your friends and family. We all get referrals from friends and family typically, or your realtor. When you find one that you really love, your realtors recommend people. So it is all based on recommendations, but what Cindy and I are getting at is you still just need to be comfortable with them. Even if your best friend said they were the best person in the world, if you're not comfortable with them, don't work with them. This is a big deal. This is not going out and buying a car. This is not buying a t-shirt. This isn't getting a recommendation for you know, something small. This is a 30-year loan. This is a huge commitment. You want the best person for the job, so you really have to find someone that you feel is an intelligent person that can give you enough information that you're going to feel comfortable and lead you down the right path. I mean, you need a realtor that's going to say, well, maybe you just might want to drive by the house and talk to the neighbors if you want information about the area or the neighborhood or anything like that. I was a realtor for a short time when I was younger, and you know, sometimes you just want to go look at all the neighborhoods that are available. Of course, that's when there were a lot of houses available. Right now, there's not a lot of houses available. So I don't know if I covered that question or not, but you definitely.
Yeah, I think in a nutshell, I think you said it because I was thinking it is who's going to, especially as a first-time home buyer, who is providing you the most education, right?
Right.
Who's going to sit down and say, okay, here's how the process works. Here's, you know, how I can help you. And that is on the lending side and the realtor side. You want someone who's going to give you all the information that you need so you can make the best decision.
Are there any websites that would have that kind of information that would list, say, several first-time home buyer assistance programs?
So that page in there, like if you go to Freddie Mac or Fannie Mae or VA or the Missouri Housing Development Commission, and we are going to put a lot of those links on the SHED website.
Okay, good.
So when we send this recording out, it will not be exhaustive, right? Because we said, you know, different lenders have their own programs, but we will have all the majors there.
So Cindy, are you saying that in addition to the bigger organ, but the home purchasing people like Fannie Mae or the VA or something like that, that individual lenders can opt to offer assistance as well?
Correct. Yes.
Oh, okay.
Yeah, a lot of us have our own programs that we do just for our clients. They're not something that's offered to the community, and it's something that's kept within the bank. So we can make whatever rules we want to for it. So a lot of banks have their own products, but there's a lot of products that don't have to do, like Cindy listed, you know, city and county programs. There's, you know, the Urban League has $3,000 for anybody that buys in the city right now. There's, you know, the partnership that has city and county money, Better Family Life, Beyond Housing. You know, there's so many different nonprofits out there that have down payment assistance, and it depends on where you're buying, and then they make their own qualifications too. A lot of them go with the same HUD guidelines, so they're the same no matter which program, which nonprofit you go to. But there is a lot of things. There's also a company called Federal Home Loan Bank, and they also have a $7,500 grant. I mean, the money comes and goes, but that's for each property. It doesn't matter the price of the house that they give out. So there's so many programs out there. It all depends. And no, there's not a website, because each one of these has their own website. There's not anyone that wants to go out and advertise everybody else's down payment assistance programs. I don't know why. And I typically will share them between the different nonprofits to let them know. So I do have some information, Cindy, I can send you on a few of the programs. It'll actually, I gave it to some of the lenders just so they knew what some of the programs are out there.
Oh, that would be awesome. We can add that to the SHED.
And then put it all together. Okay,
Yeah.
there was another question here though about what happens if I guess we're kind of talking like the appraisal comes back at a certain level, but the house is priced at another level. But the realtor finds a company. Okay, so if you have a lender and they are not prepared to finance the entire amount, say they're only willing to do $209,000 versus $250,000, but the realtor finds a company that will finance that gap, should you walk away and look for a lower price property instead of carrying a second mortgage? Or does
Well,
that have to do with what they're comfortable
That
with?
really doesn't work that way.
Okay.
Your lender that's giving you the 209, let's say, will not let you get a loan to
For
cover
250.
the rest of it.
Okay,
Because that now you owe more on that property than it was worth. So you actually can't do that. And there's a rule, you can't get a loan to get a loan. You can't get a loan for your down payment. Okay, there's
Okay.
nonprofits that can do these quiet seconds that are forgivable after 5 years, 10 years, they're all different, but you can't get a loan to get a loan. So you can't go out and get a second or any kind of financing for that extra. You would either have to pay the difference or negotiate with the seller, like Cindy said earlier, to bring that price down to what you could put down.
all right.
Okay.
Any other questions?
I had a question
Go ahead, Mike.
about, rehab.
About-
So I know it might take a little while, but is that process much, that process is much different? And you had a couple of steps.
So you're
And I was
talking
wondering-
about like a
Go ahead, I'm sorry.
construction loan? Like, are you,
Yeah,
so that would probably be a,
well,
neg-
yeah, just maybe that a gut, I guess, a construction. Yeah,
Okay, so you were cutting out a lot, so I'm not quite sure, but this is what I've got so far. So a lot of my investors buy a house, they either pay cash because it's in so bad a shape, it's not livable. To do a typical mortgage, it has to be an average livable condition. It can need new cabinets and paint and carpet. And I mean, I've even had some that are missing some of the plumbing fixtures, but for the most part, it needs to be average livable condition to do a mortgage. But I do have people that buy houses and then they use their own money to fix it up and then they either sell it or refinance it based on that price. A typical construction loan, there really isn't an easy way to buy an existing house and get money to fix it up. There are programs, there are, seconds, you can't, if you go to any typical mortgage company, they're not going to want to give you money to buy a house and then give you money for fix up. There is a 203K loan if you're going to live in it. I mean, there's different weird products, but for the most part, I'm just going to say it's a simple, like, you really can't get a loan and then get more money to fix it up. There is maybe a way to do it, but I'm just going to say as a general rule, most people cannot do that.
and the second question is about sustainability. Do you know of any products for when moves in a house for a contingency fund, if you will, or a little bit about Home Shield, and if that's a product that's worth it for a new buyer, because some of these homes are older and anything can happen, like the roof and just
like
immediate.
a
Home
home warranty?
warranty? Yeah.
I recommend it. Now, again, as we say, not everything is created equal. We actually use American Home Shield. And so 2 ways to think about that. If you're buying a home, that's something you can even ask the seller to provide. Or if they're not willing to, when you've made a real estate purchase, you have 90 days to buy a home warranty program. So we use American Home Shield, and we have even some of our agents in our office. I don't personally have one, but I've had experience with my clients that have it, and they're very good. It's repair, replace. They have 3 levels of service. You get a better deal when you purchase it with a real estate transaction. So like I said, you have 90 days after you close to make that purchase. And then at the end of the renewal, you can keep, even if the price goes up, you can keep the real estate price versus going out and buying it on your own from the web. But they have everything from, you'd have to look at their different models, but it starts like with having the house rekeyed. They'll rekey the house, after closing. If they come out and they determine that the furnace can't be fixed properly, they will buy you a new furnace. But it covers things like ceiling fans. I mean, it covers a lot of stuff that you wouldn't think of. So I think for a first-time home buyer, especially since you've probably spent a lot of your savings on, getting into the house, it's a peace of mind investment. Even if you end up not having to use it, it would certainly help save you a lot of money, because it covers appliances, your stove, your microwave, your dishwasher. So I think it's a good investment.
Yeah, and you can even buy multiple years all at closing. I know sometimes you even get it cheaper. I bought my niece, I bought her 3 years, so I felt like, and she's used it. She's gotten a new furnace. She's had them out multiple times for air conditioner and other things. So I feel like it was well worth it. And when you buy multiple years, you get it a lot cheaper. The First Bank has something special. It's a Thrive Home Improvement Loan. And like we were talking about, Mimi, different banks have different products. And if you close your mortgage with First Bank, there's no waiting period, and you can take out that Thrive Home Improvement Loan if you qualify, of course. But it's not even a second mortgage, doesn't even get put as a lien on your house. They don't do an appraisal, they don't do anything, but they'll just give you a loan up to $12,000 for 10 years. They'll stretch it as long as you want, up to 10 years if you want to, just in case something does happen, you need a new air conditioner and you didn't get the warranty, or if there's something that you need to do work on. So there are some little niche products out there. You never know what you can find. So if you guys, if something happens after you close, definitely call your lender, call your realtor, and see what they know about that they can help you. Maybe they have the right HVAC person that can help you. There's lots of different things. So we're really with our clients the rest of their lives. I mean, we get calls to, say happy holidays and things like that, but also just, hey, I got this piece of paper in the mail. What do I do with it? We're always here. Oh, the taxes went up. I got the tax bill. Do I have to pay the tax bill? Well, depending on the loan, but typically that tax bill was already paid in your loan. But we get those every year, and we love to hear from our clients. So
Thank you.
all right, I was told to be 20 minutes, so I was very fast today, but if you guys have any other questions, I'm here.
Yeah, last call for questions. I mean, we're technically here until 7:30. So if there's any other questions, we'll still be on. And if not, the slide should be put up on the SHED website, which is the https://shed.stl.org. Give us a day or so to get them up there so that you can take a look at them, which would include obviously the slide for Nicole Theberge with First Bank. Cindy, I see a listing down here for Laura McCarthy, but do you?
I know
have
I didn't
slide
see
with
any
your
information
individual?
for Cindy.
Oh,
Okay, all right.
well, even beyond that, there's a typo. So I'm going to fix that typo.
Okay, cool.
You
And
want to send it to me?
I
You
will.
want me to send
No,
you?
Bridget, no, we'll take care of it.
Okay, all right, yeah, so that people do have more questions, or if, given the conversation, you feel comfortable saying, hey, I'd like a realtor like Cindy, or I'd like a lender like Nicole, then you have their direct information so you can begin the conversations with them.
Yeah, my phone number is on here. Honestly, you can text me, call me anytime. I'll answer any questions. If you're not ready to get going, there's no commitment from me. Okay. You don't have to use me, but I appreciate you if you do, obviously, but you can just ask me any question. I love to help people. This is what I live for. I really enjoy my job. So if you need anything, just reach out to me. Any questions?
And I bet if you were to ask Nicole, that she works the same hours as real estate agents.
Yes, I work
Okay.
24/7. I
That-
never take any time off. If you're out looking at a house on Saturday and you don't have a pre-approval yet, you can call me. I have my laptop. I'm always working. My cell phone has a hotspot, so no matter where I am, I'm always working. So,
All right. Well, I want to thank, if there's no other questions, I want to thank both of you for being on with us tonight. This is again, probably from a majority of people, the largest purchase they will make in their life. And it's the largest asset most of us have. And it is so important for giving us wealth, and particularly giving us wealth that we can pass on to our children. So home ownership is a key indicator of wealth among all peoples, all, both all races. It's important. It really is. It may not be for everybody, but if you're really interested in it, I hope you found some information today that can help you along with that process. Know that we're here to help. Cindy's here to help. Nicole is here to help. So with that, I want to thank everybody for being on tonight. If you have any questions, you can also leave them right there on that SHED website. And thank you for being with us tonight. Good
thank
night,
you.
everyone.
Good night.
Good night.